All right, good morning, traders. So I think this is a good opportunity to do some analysis on Alibaba stock. And as we see here, we have a nice gap up, but we know that any gaps are always susceptible to close. Now we do have a gap up here, but we also were close yesterday before it came down. Now I wasn't in yesterday. I did get in towards the close yesterday right after the dip. So it's a nice trade so far. But what I really want to talk about is I want to talk about first the intrinsic value of this. The higher time frame intrinsic value or fair value is at 109.72 according to the DCF model. Now, just keep in mind that changes quite often. In fact, yesterday it was at 108, and today at the open it may change. So these are just kind of guides to go off of, and we'll get into that momentarily. Another thing to look at today is really this today's data. We have a mixed bag. There's a lot of good. It was revised down. A lot of stuff was revised down, which is not so great. Consumer spending. But this GDP price index, I don't know if that's too good either. PCE prices, though, this was brought down a lot. And I think this is huge. And this is why we're actually staying up, because if we look at the continuous jobless claims, those figures are dropping. And that's not really what the Fed wants to see, but what they want to see is a combination of this piece, inflation continuing to pull back and a relatively strong labor market. There's a thin line there, though. At what point does that create the conditions for this to go up? And I think we find out tomorrow what the most recent data is. But yeah, looking at this, it's not looking too hot. And this is another one. It says low right here, but I think this is actually higher value as well, because prices paid for December, this is recent. There was a pretty big uptick and new orders is down. So could that play into supply and demand? That there's, prices are high because there wasn't that much supply. So again, that's something to look into or just keep an eye on for today. But let's get back to the charts, because that's where the magic happens, right? So right off top, what do we have here? We have a gap up. The PCE data quarter on quarter, I think, is very positive for markets as of right now, because it suggests that the Fed certainly does not have to raise rates anymore. And being down at 2% for the quarter, that's a pretty stark pullback. So could that bring back the thinking that, hey, March is certainly still on the table, because the Fed participants decided to walk a lot of their statements back, or, and kind of be more neutral, hawkish, I guess you can say, or neutral dovish, just neutral. A little bit of hawkishness, a little bit of dovishness. But when it comes to the charts, for me, we could see a pullback right here. Now, of course, my target is up here. So I do not want to see a pullback here. But realistically, could this become a head and shoulders? It can. There is that potential, especially if inflation tomorrow, PCE, were to tick up. Now, we've seen a good development right there that the Q3 was revised down. So that shows a good trend over the course of 3 months, right? Is that trend going to continue starting off right now in December, right, for the end of Q4? And I think that's anyone's guess, but as far as like the technicals go, like I was saying, I do not want to see it come under this umbrella, because as long as it's under this umbrella, even if we close this gap and come down slightly, I think as long as we remain above it, then this is certainly possible. Up here, at least 76, mid 77, with a potential max of 79 before we see some considerable pullback. And the reason I say 79 is because there's the 200-day MA on the 4-hour up there currently. Now we have the 1 hour right here. So I think the range is pretty much as is. But looking forward, we do have that 109 as the ultimate goal. And what's a realistic time frame for that? Now, there's a lot to contend with right here. And this 79 is not only the 200 MA currently, but it's also where support was going back. If we just kind of scroll back to the charts, we see that support was there. And once it actually broke under, and came up, it confirmed that it was resistance now. Now, the bright side of things is that this trend line, this breakdown, has not been tested yet. And when can we be up there if indeed we start to run up? My estimate is maybe as soon as first or second week of January to end of January. And I think the end of January makes sense because the dividend payout is on the 18th. So prices tend to kind of pull back once the dividend is paid out. Right. So I think near term, we may see something like this if inflation is not favorable tomorrow for the, month over month, we may see some pullback. So I don't think we're out of the woods just yet, but clearing as much of this as possible and then establishing a higher low in this area, to me, is certainly a great thing because that would pretty much, to me, almost confirm that we're going to be above that. Now, I don't think that breakout would be confirmed until we break this descending channel, which is a nice little channel right here. There was a couple overshoots or whatnot, but if indeed this becomes the channel, and then I think, after some consolidation here, we would know that we're on our way to that area once we break above that, right? And that's when it may happen. Once we do break that, that's when the magic happens. So I think we're still contained for a little while, but in the short term, there is some upside. I have it as early as tomorrow. So if it does hit, fantastic. But just understand there's risk. And you know what? As if indeed this does become a head and shoulders, there's a lot of downside risk as well. This doesn't necessarily have to be the bottom. It could be because it would be a higher low coming off the lows on the 4 hour. If we look here, these are the lows right here. So if indeed this does become the higher low, this is a fantastic development after a retest of sorts of that major trend line going way back up there. So if it becomes that and we break up that way, we're probably going to have to pull back some from here. But if it becomes that 79, 80 becomes support after a close right there, then I think, that becomes very possible. And in fact, I think we can go higher than the intrinsic value or the perceived value up to 120. So I think tempered expectations is the way to go right now for now. And, but there's some good plays in the short term. So I hope this helped. And if, follow me on YouTube because I'll be dropping more videos. So happy trading and best of luck.